Hello friends. In Indian culture, we place senior citizens on a higher pedestal. They are also considered to be a vulnerable class. Perhaps for all these reasons, they are given certain benefits, maybe travel concessions, or maybe higher rate of bank interest, or even priority in vaccination, etc. Today, let's examine what does Income Tax Act give to senior citizens. Now, when we say senior citizen, first we should understand who is a senior citizen. Now, under Income Tax Act, Section 2, which is generally the definition section, doesn't define who is a senior citizen. But it is Section 207, which talks about senior citizen, as to who is a senior citizen. Now, this section says any person who has completed 60 years, who is 60 years or more during any time of the previous year. That means during the relevant financial year, if the taxpayer has completed 60 years, then he will be treated as senior citizen for tax purposes. Income Tax Act has also created another class called super senior citizens. Now, according to the Act, a person who has completed 80 years of age during the relevant financial year, of course, will be considered as super senior citizen. Now let's see the benefits that are available to senior citizens as well as super senior citizens. Of course, whatever benefits that are available to senior citizens will automatically be available to super senior citizens also. Now first, coming to the tax rates. With reference to assessment year 2022-23, that means the current financial year, the basic exemption limit, the threshold limit for taxation is 3 lakh rupees for senior citizens as against 2,50,000 rupees for non-senior citizens. For senior citizens, the threshold limit is 3 lakh rupees, whereas in the case of super senior citizens, it is 5 lakh rupees. Every taxpayer has to pay advance tax. Of course, if his income is covered by TDS, then he will not pay advance tax. Others required to pay advance tax. Now, Section 207, which talks about advance tax, says that senior citizens need not pay any advance tax if first the taxpayer is a resident of India. Then secondly, he does not have any business or professional income. Then in such a case, he need not pay advance tax. Of course, when he need not pay advance tax, there is no question of levy of interest for the failure of payment of advance tax also. Regarding interest income, many senior citizens may depend upon interest income for their livelihood. Now, Section 80 TTB gives certain benefits in this regard to senior citizens. It says any interest that is received from a bank, okay, or a cooperative bank or a cooperative society or a post office, etc., are exempt from tax up to rupees 50,000. Now, for example, a senior citizen has got, say, 3 lakh rupees as interest income, or even for that matter 3,50,000 rupees as interest income. He will not pay any tax because 3 lakhs is the basic exemption, then plus 50,000 rupees is the deduction that is available under Section 80 TTB. Okay. Of course, if the taxpayer is a non-resident, then non-resident Indian, then the deduction would be restricted to 10,000 rupees. For all resident Indian senior citizens, the deduction is 50,000 rupees. Now, coming to TDS, Section 197A(1)(c) says that in the case of senior citizens, no TDS need to be done if the senior citizens furnishes Form 15H to the person who is responsible for deduction of tax, of course, and he gives a declaration that his income is below the threshold limit. That is, he has income, his total income is below say rupees 3 lakh or 5 lakh, whatever it is. And the types of income that are covered under this provision are interest income from bank, post office, etc., or maturity of any insurance policy. Okay, certain insurance policies are taxable on maturity. Okay, so for these cases, section is applicable. And rental income. Suppose a senior citizen has got a rental income above the threshold limit, then if this section, if this form is given saying that he has no taxable limit, then no TDS is required as per section 194I. For a senior citizen, medical expenditure is a huge issue. Okay. Therefore, section 80D provides certain incentive or benefits, we'll say benefits to the senior citizens. It says health insurance premium paid for a senior citizen is deductible up to 50,000 rupees. This is 25,000 rupees in others case, whereas in the case of senior citizens, the limit is 50,000 rupees. In case the senior citizen is not covered by any medical insurance, then the expenditure incurred, the medical expenditure incurred is also deductible up to 50,000 rupees. Of course, here the condition is that the senior citizen in respect of whom the deduction is being claimed is not covered by any medical insurance or any health insurance. Section 80DDB talks about some serious ailments like dementia, cancer, or chronic renal failure, etc. Okay. These are called specified diseases. Now, Rule 11DD of income tax rules gives a list of such diseases which are covered by this section. Now, any expenditure with regard to these diseases, deduction can be claimed in respect of a senior citizen up to 1 lakh rupees. This is 40,000 in respect of others, whereas in the case of senior citizens, the limit is 1 lakh rupees. Of course, certain condition needs to be specified as mentioned in this section, like medical certificate from the concerned doctor is necessary, etc. The current budget has introduced section 194P. Now this says senior citizens need not file return of income. Of course, any benefit comes with the rider. So here the caveat is that the taxpayer must satisfy the following conditions to avail of this benefit. That is, he must be a resident and he must be 75 years or more. And he must be receiving income only from pension and or bank interest. It is either pension plus bank interest or only bank interest or only pension. But this interest, this bank interest must be from a notified bank which pays pension to the senior citizen. Okay. Now in that case, the taxpayer has to submit a declaration to the bank about his total income, and depending upon that declaration, the concerned bank would calculate his tax liability, and in case there is any liability, it will deduct tax, and this taxpayer need not file any return of income. Of course, this is effective from 1st April 2021. That means it's applicable to the current financial year. Yes, friends, that's what I had in this video. Any queries, any questions, please leave a comment. Thank you.